Hey folks, so in today's video, we will understand few mistakes that all of us do when we are trading in options. And these mistakes I have identified from my personal learnings and also when we communicate to a lot of our users. At that time, these are few of the mistakes which I came across, which were common, which I have also done at some point trading in options. So to start off with, the biggest mistake that we do when we are trading options is we just use options as an instrument to just play the direction. What I mean by this is everybody in the market, be it you, be it me, be it most of the traders, all we do is we just go on a trading terminal and we just are tackling one aspect of options, which is where the market will go. How can I monetize the direction in the market? But talking about options, there is a lot more rather than just playing out on the price. That means underlying upar jayega, I'll buy a call, underlying niche jayega, I'll buy a put. That is the only understanding that we look at when we talk about options. We never look at the aspect of time decay, we never look at the aspect of monetizing volatility, which has lately got a lot of attention, but I still feel that that area is still untouched. And if you want to trade options in a systematic way, you should always be open towards volatility trading strategies as well. Specifically, I would say that go ahead with strategies wherein the most of the things go in your favor. Something like a long straddle. Okay. So what is a long straddle? Long straddle means you are going ahead and buying a call and a put option. Now, why you are doing that? Because you are expecting the volatility in the market to go up. The moment volatility in the market goes up, the call and put premiums become expensive. That's number one. Number two thing is, if market gives a directional move in any of the side, be it on the upside or on the downside, still that strategy will make you money. So let me just show you how exactly this thing will work. So let me just take you to architect. By the way, this is option strategy builder. You can come here and you can create and analyze your option trading strategies. Let's say 13 July because today's expiry is concluded. Then let's say this 13 July put option.
Hey traders, Quantsapp has simplified option trading analytics for you. Click the link in the description box below, complete your sign up process and access the most advanced option analytical tools in the entire industry. Thank you.
Alright. Now what this thing is trying to show, it's trying to show me PNL on what various levels of Nifty, how much profit or loss I would end up making. Generally, what we do, we just focus on either buying a call option in anticipation that the market will go up, and we either buy a put option in anticipation that the market will go down. But what if I do both these things together, right? But why will I do this? The question remains, why will I do this? If you it's like you go ahead and do this every day, day in day out, it will make you money. No, it's not like that. We are doing it because we know that there is one more component of the option which is moving the option premium, which is nothing but implied volatility, the IV, the volatility. Now, if you see, if I just ask the application, what will be my PNL T plus 1 day from here, on what level, how much profit or loss I will make. Now, if you see at the current level, 19,491, this is saying me that I might end up making a loss around 800 rupees in this option strategy. That means tomorrow, end of the day, if market remains where it is, I'll make a loss roughly around 800 rupees. But now let's say if volatility goes up by 8%, right? Now you see at the same level, I'm not making loss, right? It is break even, what you can say over here. And eventually, if the market goes up, you will end up making money. If the market goes down, still you will end up making money. But the entire crux of this option trading strategy is that the volatility has to go up from the current level, because of which the call and put premiums become expensive, become much more, they become pricey. So that is the first thing. Now the question will be, how can you go ahead and identify sweet spots of volatility? So see, mean reverting nature hai volatility ka. That means it will move in a range. So whenever implied volatility you see na that it is at the bottom, that is the time you can anticipate that the implied volatility might go up. And vice versa on the upside. If you see that the implied volatility is making a top, right, that is the time you can anticipate that the implied volatility might collapse. So you can use directly, if you want a direct assistance, you can use Quantsapp Vol Trader. Okay, this analytic. This will help us in identifying volatility based buying and selling opportunities. Now it is very simple here. Long volatility, that means buying options strategy is what we will prefer. Short volatility, that means selling options trading strategy is what we will prefer. Generally, iron flies, iron condors when there is a short volatility opportunity. On long volatility, it is very simple, plain vanilla, at the money, call and put buy. Now, the problem with this strategy is that we will not hold this strategy till the expiry because it will become useless then. So whenever you are doing long or short, long straddles generally, okay, long straddles, long triangles, even if you are buying naked option, a naked call or put, make sure that your holding period does not exceed more than 2 or 3 days. 2 to 4 days is maximum holding period what you should stay in that strategy. Okay, then whatever happens, just book the theta loss and just exit from the market. 4 days from here, let's say if nothing happens, I anticipated that the market, let's say that the IV will go up, but there was no big movement happening in IV, and assume that in worst case scenario that the market remains where it is, which is a very rare possibility that 4 days after as well the market will be exactly at the same level. But still, let's assume that if market remains here, it is here itself. Then what we will do? Simple, we will go ahead and book this theta loss, whatever it is, and we will exit from the market. So in this scenario, whenever there is a big move, it will give you big money. Whenever market will take some amount from you back, right? So we will give a small chunk back to the market. So this is from long straddle, this is from trading aspect of volatility. Now talking about the other aspect, don't just keep on predicting where the direction is going to go, where the market is going to go. Always spend time on strategy building as well, strategy analysis. You felt that the market will go up by 200 points and market went up by 200 points, but the strategy that you picked up, it didn't pay you any money. Is there any sense trading options? Absolutely not. So whenever you are trading in options, always make sure that you spend time on strategy building as well. So one of the simplest ways to do is again options architect. So just come to options architect and just keep on checking whether the strategy is making you money or not. So just search for architect. So let's say architect, custom strategy, and just keep on adding. So at the initial phases, all you do is just keep on adding your strategies here and just keep on analyzing the payoffs on what levels, how much profit or loss you are going to make. And if you are trading in options, make sure that if you are picking up a strategy, it should make you money. Don't do it just because everybody in the market is doing it. Only do that strategy that if the market goes to that point, let's say you are expecting a 200 points up move from here. But now let's say 200, after 200 points up move, the strategy does not yield you any return. So don't go ahead and do it. Okay. Always keep reward to risk in your favor. Always make sure that you are analyzing the strategy, that if my target is achieved, will it give me money? If the answer comes out to be yes, then how much it is giving out? Is it lucrative enough to participate? If the answer comes out to be yes, then okay, that's a to go. And trust me, the moment you keep on doing this process very frequently, it is hardly a 5 seconds job. Maximum 5 to 10 seconds. बहुत ज़्यादा हो गया to do this entire analysis. Only thing you need to do is just hover your cursor and just see at your target if you are making money or not. If not, convert your strategies into spreads. So just go ahead and sell a call option. Let's say I'm going ahead and selling a call option of 19,800. Just do it and just see if this makes sense, right? And eventually you will see the difference, and it will not be an overnight process. And one more thing, what I want to add over here is that everybody thinks that options, or be it even in general stock trading as well, everybody thinks that it is overnight process, we will learn it in 1 day or 2 day. But you know, it is a long-term journey what you are getting associated. So trust the process, keep your process systematic, keep your trades very much systematic, system oriented, data oriented. In the long run, you will see the impact. And also, as I said, don't keep on guessing where the market is going to go. Bazaar kahan jayega, tezi mandi. Don't keep on doing that. There are a lot of other aspects of options as well. Try to leverage that. If you want to just predict direction, just go ahead and trade futures. I would say that that is much more simpler. That is much more easier. Nothing, you just buy futures, set, if you are want if there is a bearish, we just sell a future and sell. That is much more simpler than options if you just want to play the direction. So if you want to do something better, try to first monetize volatility sweet spots. Try to identify sweet spots of time decay and accordingly choose your option trading strategy, right? And last thing is always whenever you are trading in options, so not a lot of scripts would be liquid. Nifty, Bank Nifty, Fin Nifty in options are very much liquid. Reliance, HDFC Twins, and all those things are decently liquid. But always trade options which are liquid. Always pick up those stocks which are providing liquidity elsewhere. कितना अच्छा opportunity होने दीजिए. Don't go ahead and take a trade there because the bid-ask spread will take a big chunk away from you. So if you just come to liquidity finder, you will get to see that the liquidity is rated over here. More the rating, more the liquidity, less the rating, less the liquidity. Over here, you will prefer something which has 5. Any stock which has 5 rating, that is a to go for me. But additional filter what you can add is generally prefer top 20, 30 Nifty stocks that should do the job, right? And apart from that, one more thing what I have learned over the period is don't go ahead and just buy the stock just because it was down by 5% yesterday, or don't go ahead and sell the stock just because it was up by 5% yesterday. If you just see Eicher Motors, okay, so let me just pull off a chart of Eicher Motors. So let's say built up script symbol recent, it is most one of the most fresh examples. So this is in Petro, one of the most again textbook in examples wherein why we should not sell if the stock is going up. So Eicher Motors, on this day, the stock was down by roughly around 5%. Then everybody of us would have thought that this is the right time to buy because I'm getting it cheap. Yesterday, something which was available at 3,640. Now it is available at 3,400. I'm getting a 200 rupees discount. Why shouldn't I go ahead and buy? But the thing is, first thing whenever you're trading a direction, just see if there are a lot of longs if you're doing a bullish trade, and if you're doing a bearish trade, just check if there are a lot of shorts. So over here, if I want to buy, first thing is I'll ask the data, are there a lot of longs in system? If the answer comes out to be no, then I will not go ahead and buy. Something like this, let's say it is down by 5%. So including me, a lot of us, or everybody of us, would be target of bottom fishing. That means on every fall we need to buy, right? But the scenario is I'm not getting to see a lot of longs, and instead on the day which there was a big fall, there was a short build up happening in the market, and eventually the stock is going down. It is now at 3,250. So whenever you want to take a directional trade, always ensure that the stock has a trend which exists in that, right? If you buy a stock where there is nothing action happening, then you can't say that, okay, this indicator I saw, but the stock didn't move. Always to trade a direction stock, catch a stock which is trending. You would fail sometimes, that is okay, but always pick up the stock which is trending. And simple mantra is longs for Teasy and reds for Mandi, shorts for Mandi. And yes, folks, that was it from my side. Thank you so much for joining me up till here. Do check out Quantsapp from link in the description box below and add an edge to your options trading.